Hello and welcome to News Now with me, Ankur Mishra and Shani Bharat. Let's start with the state of the economy segment. The IIP data has been just released. Industrial growth in the month of May has risen to 5.1% versus 4.9% in the previous month. In fact, if you talk about the constituents, manufacturing sector growth remained steady in May, rising to 5.5% versus 4.2%. Electricity and gas supply also showed remarkable comeback, growing 9.9% versus a degrowth of over 5% last year. Meanwhile, mining sector saw sluggishness, down minus 1.6% versus robust growth of 5.8% last year. To discuss IIP data, we have with us two eminent guests, Gaura Sengupta, Chief Economist, IDFC First Bank, as well as Sakshi Gupta, Principal Economist, HDFC Bank. Welcome. First of all, I want to come to you, Gaura, to understand the constituents of the headline data itself. If you talk about headline IIP, that is, of course, coming at 5.1%. But how much of the improvement reflects a genuine industrial momentum, and how much is actually due to the shift from WPI to output PPI?
I don't think the output PPI had too much of an impact, because you can see the last month IIP is unchanged at 4.9. Also, the gap between output PPI and WPI, if you look at on an average basis, is not much. So we don't think there's going to be too much of an impact. 30% of the constituents of IIP are actually calculated in a value basis and then deflated. 70% of IIP is calculated on a volume basis. So impact would be minimal as per our understanding. Looking at the trend between PPI and WPI is similar. If you look at the weakness in if you compare, let's say, the year-on-year growth in May versus the year-on-year growth in April, the some moderation that you are seeing in manufacturing, that is actually led by refined petroleum products. Even within, let's say, the mining subsegment, it is a fuel components which have contributed to slow down. The good bit, which would be a sign of strength, is the consumer-oriented subsegments of IIP are still showing growth. You see that in consumer durables, you see that in non-durables, even within manufacturing, electronic goods, motor vehicle sectors had contributed to a pickup within the manufacturing subsegment.
Definitely. Sakshi, I want to understand from you, capital goods output has surged 12.9%. Can we finally say private capex cycle has actually begun, or is government spending still doing the heavy lifting?
Right. I mean, it is difficult to segregate 1 month's data to point out whether it's private or government. But I think the overall sense that we are getting tracking data over the last couple of months, and also looking at the GDP data, for Q4 as well as Q3 of last year, there is some sense that, it's not just being driven by higher government capital expenditure, but some sort of improvement that has also been underway for some months now on the private side, right? So by that extension, I think getting a capital goods IIP number here, which is above 12% for the second consecutive month, clearly bodes well. I think in terms of, prospects around investment growth, but I think we'll have to wait and get the official data around private investments to really confirm how much of this is government and how much of this would be the private sector.
Right, and if you talk about the highlight of this IIP data is, of course, consistently manufacturing growth, and that has remained healthy at 5.5% this time. But mining has actually contracted. What does this divergence tell about the economy? Gaura, I want to understand from you.
It's the fuel segment. So luckily with this new IIP, we get a little more detail for the mining segment. And there you can clearly see it is the fuel part which has been consistently resulting in sort of a negative growth. And it has continued. And this has been consistent for the last couple of months. It's not just a very recent phenomena. Other factors have not contributed, for example, weather, etc., that we don't see as an impact, as a contributing factor. It's mainly concentrated within fuel.
Right, and electricity generation per se has risen sharply. Is this sign of stronger industrial activity, or simply higher seasonal demand due to the summer? How do you assess this, Sakshi?
I think a large part of this is perhaps does have to do with the seasonal effect. You did have heat waves in the north also during this time. This is, data for the month of May. So I think a part of this, of course, is being driven by seasonal factors. But now, because we also have details within electricity, I think a lot of the growth that we are seeing is also being driven by renewables, right? Which I think is a more, a story that is beyond the seasonal factor. So I think it's a mix of both. Of course, specifically the 9.9% number, I think that is being driven by, the seasonal effect. But I think the overall trend in electricity generation, and if you look at the renewable index within electricity, I think that has been very, very strong, even for the month of April as well as for the month of May.
Right. Gaura, I want to understand from you, does the data indicate that investment-led sectors are actually driving the economy? I'm saying this because auto and electrical equipments are leading manufacturing growth. So how do you see this?
I would say it's still consumer-led. That's what we can make out if you look at the manufacturing side. It is showing you it is autos, electronic equipment. It is more consumer-led. So the consumer, even in the month of May, there was some transmission of the higher fuel prices by the government of India with an increase in retail petrol and diesel prices, but it was still quite moderate in the scheme of things. If you look at other countries which have seen double-digit increase in retail petrol prices, India still saw a quite moderate 7.5% increase in petrol diesel, and that happened in the month of May. So for largely the consumption side, the consumer has stayed protected. We've also seen a very strong growth in rural, which is a phenomena that has come from last year because we've had two back-to-back good monsoons. We've also had cash transfers from state governments, which has also helped the rural side. So from a consumption perspective, the IIP is showing it is consumption-led, and it is both urban as well as rural, which has held up in Q1 because the consumer is largely protected from the oil price spike because of limited pass-through from, let's say, especially through the fuel channel. In terms of the capex cycle, I would agree with Sakshi, we need to wait for more data. Ideally, with the West Asia crisis, companies would have become a little more tentative in their capex execution plans because of the heightened uncertainty of raw material availability, price point, etc. But in last year, FY26, in Q3, we had begun to see some nascent signs of pickup in private sector capex, which was visible from bank credit, where you were seeing industrial credit activity pick up, you were seeing term loans pick up rather than just working capital. So there were nascent signs that private capex would have picked up. Our expectation is, especially for the month of May, there should have been some tentativeness because of the uncertainty created by West Asia. Government support remains the main support to the capex cycle as per our assessment. We have data till Q4 mostly for center plus state. We did see some moderation in capital expenditure from center plus state in Q4. So I would still say it is, we would still wait for data to confirm if private capex pickup has become more visible. For now, we would still say it's nascent stages for the recovery.
Right. So wait and watch will be the approach for Gaura. I want to understand from you, Sakshi, in terms of the growth projection which was given by Reserve Bank of India of 6.6% for the whole financial year. And after that, the data of May plus the activities which are there from the West Asia, how much of IIP data, particularly till month of May, support higher numbers possible for this financial year?
Right. So, look, I completely agree that the IIP data for the month of April and May has actually come in a little bit stronger than what you would initially anticipated, right? Even this print is actually stronger than what we were forecasting, which was closer to 4.5%. So, therefore, there seems to be, and not just IIP, but if you look at a number of other high frequency indicators, I mean, ranging from commercial vehicle sales to credit growth to PMI indices. A lot of these indicators are telling you that activity has actually performed slightly better than what what our expectation was, in the month of April. Now, combine that with the fact that you've also had a de-escalation in the West Asia conflict and oil prices have come off. So some of the upward pressure in terms of higher input costs also seems to be moderating, although over the coming quarter or over the coming months it will gradually kind of benefit the system. It will not be immediate, but eventually all these factors do provide some sort of upside, in my opinion, to the RBI's forecast of 6.6%. We are at 6.7% currently for GDP growth for this year. That being said, I must kind of give out a very important caveat, which is the monsoon. And you initially did cover a story around what's happening to the monsoon rainfall and how that kind of has already started showing up in the system with a lot of variation in terms of rainfall distribution across India, right? So I think that remains a key risk, and we'll have to see how that plays out and what sort of impact it has on rural incomes and rural demand going forward, and then consequently the overall growth, GDP growth forecast.
Right, Sakshi as well as Gaura, thank you so much for joining at this hour with your views. And definitely, if we talk about this month's data, Shivani, numbers have come in better than expectation, and we have been talking about in the past 3 months. Month after month, the data which is actually coming as far as the high frequency indicators are concerned, and this time in form of IIP, is definitely better than expectations.
Right, absolutely, Ankur. Now, also let's quickly take a look at how the markets fared